Something unprecedented is happening in the Caribbean right now, and it's turning decades of energy trade on its head. For the first time in regional history, Jamaica is shipping refined oil products to Trinidad and Tobago. Yes, you heard that correctly. Jamaica, a nation that has spent generations importing virtually all of its fuel needs, is now exporting oil to the very country that has dominated Caribbean energy markets for over half a century. The contracts are worth more than $140 million. The shipments are already flowing, and the implications stretch far beyond simple economics. This is a story about industrial strategy, national transformation, and a quiet revolution that most of the world has completely missed. Before we dive deeper into this remarkable development, if you're enjoying this content and want to see more in-depth analysis of economic transformations happening around the world, please take a moment to subscribe to our channel. We're working hard to reach 1,000 subscribers, and your support makes all the difference. Hit that subscribe button, and let's continue this journey together. Now, let's understand exactly what's happening here and why it matters so profoundly. Jamaica has signed 2 separate oil export agreements with Trinidad and Tobago, and when you examine the details, the scale becomes immediately apparent. The first contract is valued at approximately $90 million and covers the export of nearly 1 million barrels of fuel oil products. The second agreement is a 6-month arrangement with Peria Fuel Trading Company, Trinidad's state-owned fuel distributor, worth $50.2 million for 540,000 barrels. These aren't experimental shipments or one-time transactions. These are structured, ongoing export contracts that generate consistent revenue month after month. Let's break down what this means in practical terms. The larger $90 million deal works out to roughly $90 per barrel at current pricing. Depending on the volume of each shipment, Jamaica is earning between $5 and $8 million per month from this contract alone. The Peria arrangement involves 90,000 barrels per month, which translates to approximately $8.3 million in revenue every single month for 6 months. When you add these 2 contracts together, the total foreign exchange flowing into Jamaica exceeds $140 million. Converting that into local currency, we're talking about more than 20 billion Jamaican dollars entering the national economy directly from oil exports. To put that in perspective, 20 billion Jamaican dollars exceeds the entire annual budget of several government ministries. This is not peripheral income. This is substantial national revenue. But here's where the story gets truly fascinating. To understand the magnitude of what's happening, you need to know Jamaica's history with oil. For most of its modern existence, Jamaica has been completely dependent on oil imports. The island has no significant crude oil reserves of its own, no natural gas fields, no petrochemical infrastructure to speak of. Throughout the 20th century, Jamaica imported refined petroleum products from abroad, paying international prices and accepting whatever terms the global market dictated. The country was at the mercy of price fluctuations, supply disruptions, and the policies of foreign refiners. Every dollar spent on imported fuel was a dollar flowing out of the Jamaican economy, never to return. This began to change in the 1980s when Jamaica made a pivotal strategic decision. The government chose to build a domestic oil refinery. The facility was called Petrojam, and it was constructed in Kingston with the explicit goal of reducing import dependency and capturing more value from the oil supply chain. The logic was straightforward. If Jamaica could import crude oil instead of refined products, process that crude domestically, and then distribute the finished fuels, the country would retain the refining margin. That margin, the difference between the cost of crude oil and the selling price of gasoline, diesel, jet fuel, and other products, would stay in Jamaica instead of enriching foreign refiners. It was an ambitious industrial project for a small island nation, and it faced skepticism from the start. The construction of Petrojam was not without controversy. Critics questioned whether Jamaica had the technical expertise to operate a complex refinery. Others worried about the capital costs, the environmental risks, and whether the facility could ever be profitable. Over the years, Petrojam faced numerous challenges. There were periods of inefficiency, management disputes, questions about corruption, and debates over whether the refinery should be privatized or remain under state control. At various points, the facility operated below capacity. Maintenance issues arose. International oil price crashes made refining margins razor-thin. There were moments when it seemed like Petrojam might become a white elephant, a costly mistake that drained government resources without delivering meaningful returns. But the refinery survived. Through changes in ownership structure, management reforms, and gradual technical improvements, Petrojam remained operational. And now, more than 4 decades after its construction, the facility is proving its strategic worth in ways that even its original architects might not have fully anticipated. Petrojam is not just supplying Jamaica's domestic fuel needs. It is generating export revenue. It is turning Jamaica into a regional supplier, and it is fundamentally altering the balance of energy trade in the Caribbean. So how exactly does this work? Let's walk through the process. Crude oil is imported into Jamaica, typically from producers in South America or other regions, and delivered to Petrojam's facility in Kingston. The refinery has the capacity to process approximately 35,000 barrels of crude oil per day, though actual throughput varies depending on maintenance schedules and market conditions. Once the crude arrives, it undergoes a complex refining process that separates it into various products based on boiling points and molecular structures. The refinery produces gasoline for vehicles, diesel for trucks and generators, jet fuel for aircraft, liquefied petroleum gas for cooking, and various grades of fuel oil. The fuel oils are particularly important for the current export contracts. These are heavier petroleum products used primarily as bunker fuel for ships. There are different grades, including very low sulfur fuel oil, which meets stringent international environmental standards introduced in 2020, and high sulfur fuel oil, which is still used by some vessels operating in regions with less restrictive regulations. The Caribbean, with its heavy maritime traffic, cruise ship routes, cargo shipping lanes, and proximity to the Panama Canal, has enormous demand for marine fuels. Ships need to refuel constantly, and ports that can provide reliable bunkering services have a significant competitive advantage. After refining, Petrojam's fuel products are stored in large tanks at the refinery's terminal in Kingston Harbor. When a buyer like Peria Fuel Trading places an order, the fuel is pumped through pipelines into tanker ships docked at the port. These vessels then transport the product across the Caribbean to Trinidad and Tobago, where it enters Trinidad's distribution system or is used directly for maritime bunkering. The entire operation, from crude import to refined product export, happens within Jamaica's borders, and every step of that process generates economic value that stays in the country. This is a crucial distinction. Jamaica is not simply buying refined fuel from one country and reselling it to another. That would be arbitrage, and the margins would be minimal. Instead, Jamaica is importing raw crude oil, adding value through the refining process, and exporting higher-value finished products. The refining margin, the profit from that transformation, accrues to Petrojam and, by extension, to the Jamaican economy. This is industrial value creation. This is exactly the kind of economic activity that builds wealth, supports high-skilled employment, and strengthens a nation's position in international trade. Now let's consider the buyer. Trinidad and Tobago is not just any customer. For more than 60 years, Trinidad has been the unquestioned energy powerhouse of the Caribbean. The Twin Island nation possesses substantial offshore oil and gas reserves, operates multiple refineries, and is one of the world's leading exporters of liquefied natural gas. Trinidad's Point Lisa's industrial estate is one of the most important petrochemical complexes in the Western Hemisphere. The country has built its entire modern economy around energy exports, and for decades, Trinidad supplied fuel not just to Jamaica, but to virtually every island nation in the region. Barbados, St. Lucia, Grenada, the Bahamas, even parts of Central America, all depended on Trinidad for refined petroleum products. For Jamaica to now be selling oil to Trinidad represents a remarkable reversal. It doesn't mean Trinidad has run out of oil or lost its refining capacity. Trinidad still produces far more energy than Jamaica ever will. But what it does mean is that Jamaica has reached a level of operational efficiency and reliability where even a major regional producer like Trinidad finds it economically advantageous to source certain products from Petrojam. That is a profound statement about the quality and competitiveness of Jamaica's refinery operations. Why would Trinidad buy fuel from Jamaica? There are several plausible reasons. First, refining is capital-intensive and operationally complex. Even large producers sometimes find it more efficient to import specific products rather than run their own refineries at full capacity across all product lines. Trinidad's refineries may be optimized for certain fuels, and importing others from nearby suppliers makes logistical and economic sense. Second, Petrojam may have excess capacity in specific product grades that Trinidad needs, creating a natural complementary relationship. Third, the proximity between Kingston and Port of Spain makes shipping costs relatively low, and quick turnaround times mean Trinidad can maintain lower inventory levels while still ensuring supply security. Fourth, regional energy trade builds resilience. By diversifying supply sources, Trinidad reduces its vulnerability to disruptions at any single facility. Whatever the specific drivers, the fact remains that Trinidad, the Caribbean's energy giant, is now a customer of Jamaica. That shift is not just economic. It is symbolic. It represents a maturation of Jamaica's industrial capabilities and a rebalancing of regional power dynamics that has been quietly underway for several years. And here's the thing. The current contracts with Trinidad are not isolated. They are part of a much larger pattern. Since 2024, Petrojam has exported approximately 4.5 million barrels of fuel products to various destinations. That has generated more than $500 million in foreign exchange earnings. $500 million from a country that, just a generation ago, was spending hundreds of millions of dollars per year importing refined fuel. The trajectory is undeniable. Jamaica is transitioning from being purely a consumer of refined petroleum products to being a significant regional exporter. The economic implications of this transition are profound on multiple levels. Let's start with foreign exchange reserves. For any country, but especially for small island nations, foreign exchange reserves are critical. These reserves, held by the central bank, are used to stabilize the national currency, manage inflation, pay for imports, and service foreign debt. When a country has strong reserves, its currency tends to be more stable, inflation remains under control, and investor confidence is higher. When reserves are weak, the currency depreciates, import costs rise, inflation accelerates, and economic instability follows. Jamaica has historically struggled with foreign exchange volatility. The Jamaican dollar has depreciated significantly over the decades, and managing that depreciation has been a constant challenge for policymakers. Every additional source of foreign exchange earnings helps stabilize the currency and strengthens the central bank's ability to intervene in currency markets when necessary. The $140 million from the Trinidad contracts alone provides meaningful support to Jamaica's reserve position. When combined with the additional hundreds of millions generated from other Petrojam exports, tourism revenues, remittances, and bauxite exports, Jamaica's overall foreign exchange position becomes significantly more robust. Then there's employment. Petrojam directly employs hundreds of people in highly skilled positions. Refinery operators, process engineers, chemical engineers, maintenance technicians, quality control specialists, logistics coordinators, shipping managers, and administrative staff. These are not minimum wage jobs. Refinery work requires technical education, specialized training, and continuous skill development. The wages are well above the national average, and the expertise gained is transferable to other industries. Training a chemical engineer or a process control specialist through refinery operations creates human capital that can be deployed in other sectors, from manufacturing to renewable energy to environmental management. Over time, this builds a technical workforce that enhances Jamaica's overall economic competitiveness. Beyond direct employment, there are multiplier effects. The refinery requires services from trucking companies, maintenance contractors, engineering firms, catering services, security companies, and port operators. It generates demand for financial services, insurance, legal expertise, and logistics coordination. Every dollar earned by Petrojam circulates through the economy multiple times, creating secondary and tertiary employment and supporting small and medium-sized businesses throughout the supply chain. There's also the question of industrial diversification. Jamaica's economy has traditionally relied on a relatively narrow set of export sectors. Tourism is the largest, accounting for a substantial portion of GDP and employment. Bauxite and alumina, derived from Jamaica's extensive mineral deposits, are another major export. Remittances from the Jamaican diaspora provide crucial foreign exchange. Agriculture, particularly sugar, coffee, and specialty crops, contributes to rural livelihoods. But beyond these sectors, Jamaica has struggled to develop large-scale manufacturing or industrial exports. Petrojam's oil exports now represent a significant diversification of the export base. Unlike tourism, which is vulnerable to global economic downturns, pandemics, natural disasters, and shifts in consumer preferences, oil exports are driven by fundamental energy demand that remains relatively stable. Unlike bauxite, which faces long-term questions about global aluminum demand and environmental sustainability, refined petroleum products have consistent demand driven by transportation, shipping, and industrial use. Oil exports provide a counterbalance to Jamaica's traditional sectors, reducing overall economic volatility and creating a more resilient national economy. Geographic location plays a crucial role here. Jamaica sits at a strategic position in the Caribbean, close to major shipping lanes that connect North America, South America, Europe, and Asia via the Panama Canal. Thousands of ships pass through or near Jamaican waters every year, and many of those vessels need refueling. Kingston Harbor is one of the largest natural harbors in the world, capable of accommodating the largest cargo ships and tankers. The infrastructure is already in place. The port facilities are modern and efficient. The regulatory environment is stable. All of these factors make Jamaica an attractive location for maritime bunkering services. If Petrojam can expand its role as a bunker fuel supplier, the revenue potential grows exponentially. Ships currently refuel at various ports throughout the Caribbean, including Panama, Curacao, and Trinidad. If Kingston can capture even a modest share of that market, the economic impact would be enormous. Bunkering is a high-volume, low-margin business, but at scale, it generates substantial revenue and creates significant downstream economic activity. Looking forward, the potential for growth is considerable. Petrojam's current capacity is approximately 35,000 barrels per day, but the facility has room for expansion and technical upgrades. If capacity were doubled through capital investment, export volumes could increase proportionally, potentially pushing annual export revenues into the billion-dollar range. At that scale, oil exports would rival tourism as a source of foreign exchange, fundamentally transforming Jamaica's economic structure. Such expansion would require investment, both in physical infrastructure and in operational efficiency, upgrading refining units to handle different crude grades, installing more advanced environmental controls to meet increasingly strict international standards, expanding storage capacity, and improving logistics systems would all be necessary. But the business case is compelling. Demand for refined products in the Caribbean remains strong and is projected to grow as regional economies develop and maritime traffic increases. There are also opportunities in product diversification. Currently, Petrojam focuses primarily on transportation fuels and bunker oils, but refineries can produce a wide range of specialty products, from petrochemical feedstocks to lubricants to asphalt. If Jamaica can develop expertise in higher-value specialty products, the economic returns would be even greater. This would require additional technical capabilities and market development, but the foundation is there. Environmental considerations are increasingly important in the global oil industry. International maritime regulations have tightened significantly in recent years, particularly around sulfur emissions from ships. The International Maritime Organization's 2020 sulfur cap mandated that marine fuels contain no more than 0.5% sulfur, down from 3.5% previously. This created enormous demand for very low sulfur fuel oil, and refineries that can produce compliant fuels have a competitive advantage. Petrojam has demonstrated the ability to meet these standards, which is why its products are in demand. Continuing to invest in environmental compliance and clean fuel technologies will be essential for maintaining that competitive edge. There are challenges, of course. Operating a refinery is complex and risky. Equipment failures, process upsets, safety incidents, and environmental releases are constant concerns that require vigilant management. Global oil markets are volatile, and refining margins can compress quickly during periods of oversupply or weak demand. Competition from larger, more efficient refineries in other regions is intense. Political and regulatory changes can impact operations. Petrojam has faced all of these challenges at various times and will continue to face them going forward. But the trajectory is clear. Jamaica has successfully transformed a strategic industrial asset into a revenue-generating export platform. The refinery that was once questioned and criticized is now a cornerstone of national economic strategy. The contracts with Trinidad and Tobago are both validation and proof of concept. They demonstrate that Jamaica can compete in regional energy markets, that Petrojam's operations meet international quality and reliability standards, and that the country has carved out a sustainable niche in Caribbean trade. The symbolism of this achievement should not be understated. For a small island nation with a population of less than 3 million people to successfully operate a complex industrial facility and export products to a regional energy giant is remarkable. It speaks to the quality of Jamaica's technical workforce, the effectiveness of industrial policy over the long term, and the resilience of institutions that kept Petrojam operational through decades of challenges. This is also a story about patience and long-term thinking. Petrojam was built in the 1980s, and for many years its contribution to the national economy was modest and its future uncertain. There were periods when closing the refinery seemed like a reasonable option. But successive governments maintained the facility, invested in upgrades when possible, and preserved the institutional knowledge necessary to keep it running. That persistence is now paying dividends. The lesson is clear. Strategic infrastructure projects often take decades to fully mature, and the temptation to abandon them during difficult periods must be resisted if the long-term benefits are to be realized. Jamaica's experience also offers lessons for other small island nations, grappling with energy security and economic development. Building domestic refining capacity is expensive and technically challenging, but it can fundamentally alter a country's economic trajectory. The key is matching the scale of investment to the size of the domestic market and the potential for regional exports, ensuring technical and managerial competence, and maintaining political commitment through inevitable periods of difficulty. The regional implications are equally interesting. For decades, Caribbean energy trade has been hierarchical, with Trinidad at the top as the dominant supplier and other islands as dependent customers. That structure is slowly changing. Jamaica's emergence as an exporter is part of a broader trend toward more diversified and multipolar energy trade in the region. Guyana's recent oil discoveries are adding another major producer to the mix. Suriname is developing its own offshore reserves. Barbados is investing in renewable energy and exploring offshore potential. The Caribbean energy landscape is becoming more complex, more competitive, and potentially more resilient as supply sources multiply. This diversification benefits everyone. It reduces the risk of supply disruptions from any single source, encourages competitive pricing, and creates opportunities for smaller nations to participate in energy trade rather than simply consuming imported products. Jamaica's success with Petrojam could inspire similar investments in other countries, gradually building a more integrated and self-sufficient regional energy system. The role of refined petroleum products in global trade is often underestimated. We tend to focus on crude oil production, the activities of major oil companies, and geopolitical conflicts over resources. But refining is where crude oil becomes useful. It's the refining process that transforms black liquid into gasoline that powers cars, diesel that moves trucks, jet fuel that flies planes, and bunker fuel that propels ships. Refineries are the critical link between raw resources and economic activity, and countries that control refining capacity have significant economic and strategic advantages. Jamaica has learned this lesson well. By building and maintaining Petrojam, the country has captured a piece of the value chain that would otherwise belong entirely to foreign corporations. Every barrel refined in Kingston is a barrel that doesn't need to be refined elsewhere and imported. Every dollar of refining margin that stays in Jamaica is a dollar that can be invested in education, healthcare, infrastructure, or debt reduction. Over time, those dollars compound into substantial national wealth. The $140 million from the Trinidad contracts is just the beginning. If Jamaica can maintain operational excellence at Petrojam, continue securing export contracts, expand capacity over time, and develop expertise in high-value products, the facility could generate billions of dollars in cumulative revenue over the coming decades. That would represent one of the most successful industrial projects in Caribbean history, a testament to the power of strategic planning and persistent execution.